Welcome back, everybody. This is Sal the Investor. We're back at it again. And as always, I want to have a quick reminder, this is not financial advice. This is just my own opinion and my own research and my own decision. So you can watch me make it, or you can watch me burn and crash and burn. And I hope I don't do that. But once again, just take heed of what I'm saying. Do your own research. Contact a financial advisor. See what plan works best for you. And today we're going to do a quick portfolio update. It's going to be kind of a quick video, not really doing much, but just kind of want to go over Bank of America, some news I heard about them, and of course going over my portfolio update. So right now, this is my update as my portfolio as of recording this video. As you can see here, cryptocurrency 73%, and my total equity is 27%. Now over June, I'm probably going to balance this out. I've been doing a lot of shorts and then taking the money and putting it elsewhere. In here, not what I would say. I go up and down on this. So like I said, I'm trying to do quick things to get cash as quickly as possible. $500 bets, make $100 off of it, and we keep going. So right now, when we're going into June, end of May, going into June, my total portfolio right now, not counting my moving and cleaning business, as you know, like the road to success on building businesses is not as quick as people think. And after 4 years of doing it, man, I could tell you I'm a little exhausted. However, I wouldn't trade any of it for the world. And this is this is really the start of this year. Everything was this start January 2022. So right now I'm a little short on equity. Wealthfront is a good thing. I would recommend anyone putting in, as well as Betterment. I'm actually going to start putting aside money into Betterment on a consistent basis. And to kind of match that, I feel like if you're going to do this path, you should always have two financial firms managing your money, so that way you don't have a total loss off of any stupid decisions that you make throughout the market. So right now, of my total portfolio, you're looking at XRP at 28% of this number here. That's kind of the biggest bag. Every time I pay myself, I always put a little bit of money in here, and I put a little bit of money in HBAR. I think those are two good bets that we should have. A lot going on with XRP. Ripple and the SEC are supposed to be meeting next week face-to-face, things like that. VVS is kind of like my toss away, just I put $50 in my lottery ticket. However, they do have some great projects going on and are working on the Crow network, so there is a lot of potential there. So we'll see when we get the next big bull run if it is worth anything. Right now, $46 kind of gets me like 5.8 million tokens. So we'll see. It could disappear, and if 1% of my portfolio disappears, you don't have to worry. Shouldn't have to worry about it. DOT is one that I'm expanding into heavily, although I'm going to switch it up and maybe put into Atom. Now, how I invest is, I always say when you pay yourself or when you get paid, your first check should go to paying all your bills, and you should have a little bit of money left over. So for me, I pay my rent, my credit cards. That's my only things. My car is under my business, so my business pays for that. So if I need a vehicle, my business covers it. So I don't really have a lot of personal thing other than personal credit cards and rent. Everything else really is paid for by the business. Cell phone, even my food can be registered under the business. But still, I'm talking about, I'm existing off of $1,000 a month and paying myself about $3,000. So that gives me a lot of room to work with as far as investing. And that's where you want to put yourself in. Because if you could put $2,000 aside towards investing every single month, you're talking $24,000 that you're putting directly into investments. And now, keep in mind, I'm growing my business. Of course, I'm growing this channel. I'm growing a lot of things. So at the same time right now. So in another 2 years, that monthly number is going to change significantly. And right now I'm kind of in reinvest mode. So any spare cash I get, any tips when I go out on my moving side I get, or cleaning projects I get, anything I do, I put as much extra in here as I can. I'm trying to get this sucker over $100,000 by the end of this year, and we're going to see if I can do it. And if I get close, hey, bravo. If I beat it, even more bravos. But right now, I set lofty goals because it keeps me focused on saying I got to put in every ounce of effort into growing to where I want to be. So, of course, if I hit $100,000 this year, I'm going to then post and do $1 million for next year, for the year after. If I hit 100,000, once I hit 100,000, then its goal is to get to $1 million valuation on this portfolio. So with that said, part of my portfolio, you see 5% is Bank of America. The other is NLY. That's a good one. That pays $13 a share on dividends. However, I got another good stock that I'm going to do after I move my moving company into its new warehouse tomorrow, or maybe the next morning. And I want to go over that with you guys because they're paying like almost $25 or almost $27 a share in dividends, and it's something really good. They do commercial residential loans. So what they do is they basically lend to apartment complexes and huge real estate development projects, which tend to pan out regardless of the whether we're in a recession or not. And there's a lot of people swung around there. I do a lot of digging, I do a lot of research, and it does affect my businesses as well, which generally cleaning and moving are kind of recession proof. They don't really go up or down too much as far as what the economy is doing. They really kind of stay consistent and busy all the time. But I do a lot of research and preparation. That's what I do. And in 6 months, I really feel like around the election time, we're going to have a downturn in the economy, and not really a downturn. We're just going to enter the real part of the recession for 6 months, and that'll put us to 12 months, and then we'll have 6 months of a bear market recovery, and then we'll be out of it in 18 to 24 months and be on our way to the moon until about 2030. So, and in 2030 we'll have a really bad crash. That's just my opinion. Do with it what you want. So, going back to this Bank of America, why I think you should be looking at this to put into your portfolio. Now, as far as dividend-wise, they suck. $2.19 per share. So that means you divide that by 4, you're making a little over 50 cents per every 3 months off of the dividends. Fine. It is what it is. Right now, it's down close to about, 38% off of its high. Kind of hit its weekly low, kind of bounced back up. Right now, we're kind of sitting at 37. My total cost that I bought into this right now is like, what is it? Like 40, I think it was like, what 42 or something like that? $44. So I just paid myself. So you probably will see this go up a little bit. I'll probably buy a couple shares of it. And there's one I want to put quite a bit of shares into and get that part of my portfolio going, and then I'm going to start going back into tech and everything. But the reason why I think now I have someone I know who works at Goldman Sachs, and they rate this as a buy, and rumor mill has it that these guys are pretty much done working on something related to crypto, and it's going to be big. They're one of the biggest banks in the US. They have a great private banking side. They have Merrill Lynch for investment and everything. They have a lot of access to if they go live with crypto, we're talking, I think, something like 30-40 million people having access to crypto in an instant. So my guess is that they're not going to do it till they're absolutely sure. Now, they're not going to be absolutely sure until they get clarity and regulation, which, of course, given the current environment and, of course, the Luna collapse, you are going to see some regulation this year. I can guarantee you that the politicians are going to put some regulation into crypto this year because it's midterm elections here in the U.S., and politicians want to get reelected. Now, I can say Democrats are going to push for regulation on this. Republicans don't really care because their constituents don't pay attention to this stuff. So, or at least not enough to warrant pushing financial restrictions on crypto or anything else like that. So what I'm saying to that this reason why this has been rated a buy is because it's still pretty strong. Their books are actually okay. They can survive a stress test. They can pretty much survive a run on the bank at this point. They have a lot of cash. They have a lot of great things going on, and they have a lot of good loans on the books. So they don't have a lot of troublesome loans or worrisome loans. And I think their exposure to the auto market is not as bad as some other banks. They're not exclusively in that. They kind of do more of longer term loans, things like that, and they kind of stay with the tried and true mortgages. So, and from what my information from someone that is an analyst at Goldman Sachs and someone I know that works at Bank of America is that they have been saying things to kind of push in the direction of just keeping cash on hand. So that means they're preparing for something, and I think they're preparing for the auto market crashing. If you haven't noticed, repossessions are up in I don't know. I think the repossessions said right now they're up 33% in prime loans and then up 48% in subprime loans. So now that you see that prime customers, or those who are considered prime at the time, are suffering repossessions, or I should say, not really repossession, but abandoned repos, which means they knew they couldn't make the payment, they didn't fight for it, they dropped the car off somewhere and abandoned it, or they dropped it off at the bank and threw the keys into the branch and say, take it, it's yours. Now, this bank is going to survive that collapse. Now, when that collapse happens, I'm not going to be surprised. I would, if I could, put some shorts on Ford, Chevy, GM, General Motors, and probably like one of the other truck manufacturers. Now, I would put a short on electrical vehicles too, because anyone making like an electric maker like Tesla and the other one, Fisher or whatever it was, I don't really pay attention to it because Tesla's the main one, because they're just too expensive. Now, I have a feeling someone who makes exclusively electric cars will come up and make a viable model at $15,000, but that hasn't happened yet. But with those saying you're only going to have two or three manufacturers, probably going to be Kia, Honda, and Corolla are going to be making money through this crash. And the reason why I say Bank of America is not exposed to that crash is because they don't have that much of their finger in that market. Their hands are really more in the consumer banking side, and then of course the mortgages. From what I'm being told, that's what they're pushing. They are pushing financial stability to their clients, to their customers, which is then growing, which is going to grow the money that those clients keep within the bank, which will allow the bank to then loan more money out and purchase more assets, whether they be loans or loan securities, or you're just talking about buying back assets or things like that. And wouldn't be surprised after all this is said and done that they plan on doing like a share buyback or something like that. If all that goes well, I expect Bank of America to be around $75 in about 3 to 5 years. Now, I've held this too back in the day on my nest egg portfolio, which is I don't touch, I just kind of invest in there, and I've been buying into it at $12 to $15 a share and kind of stopped when I started my business. So like to see it at 37, it's like it really you should have bought 5 years ago when you were like right around here somewhere. And even still, it was like way back in the day, because 5 years ago, I'd say like 2016, you probably was a good time to start buying this. However, if you're like this portfolio, this is an aggressive trading portfolio that I'm trying to build up as fast as possible. You can see my average buy-in's $44. That's probably going to go down given that it's at 37, and tomorrow I'm going to buy some shares. but a lot of the news around this is just good. I mean, they're hitting earnings expectations for Q2. They're probably going to either hit it or beat it by like 5%. But as you can see, where their focus was over, basically since the pandemic started till now, you can see that their income increased a little bit, but not as aggressively as some other banks out there. And that's solely in the reserve that I think they had someone good at the helm in their consumer division department saying, hey, look, we need to focus on getting these people financially savvy. Now, I myself am also a Bank of America client and customer, so I have the app, I have all that great stuff with them. The one thing I noticed 2 years ago was they added this digital financial assistant onto the app, which helped you make financially sound decisions. It would assess where you are, it keeps track of your credit score, and you can sit here and you can see. Now, it's not like an actual bot, but it's just a little, I guess, program that pulls up all your information and says, hey, look, this is what you should be aiming for. So what's the amount of the car loan that you should be getting, your mortgage or your rental property that you be getting? Like, what are the values of that? Now, if you want to go a step further, you can actually link it to everything that you have. So Robinhood, E-Trade, all that stuff, TD Ameritrade, all that. You can actually link that thing to everything that you have, and it will look at your total net worth and send what you are capable of back to you, which I think is very good for the millennial generation because they were never taught money. They were never taught how to finance and how to use money as a tool to get the things you want and provide for yourself during your retirement. They just kind of use money to get the experiences that they want. So for my portfolio, my ranking, Bank of America has my buy score at around 80. It's definitely a hold, but once it gets to where you want it to go, you should definitely be backing out of it and putting your money into something else that can work for you. This isn't something. This is something. If you put in $100,000 and now it's worth $200,000, divest back down to $100,000 and put that money into someplace else. That's what I say, and that's why I say a lot of things. Like if you're on crypto, put that money back into something else. Like don't sit here and be like some of these other guys that are like hold to the moon. Like you're not going to get rich trying to hope for a lottery win. You're going to get rich just taking profits and reinvesting when people start getting fearful, just dollar cost average into the market. When people are euphoric, you sell, you make your profits, and you hold off until you feel like it's the right time. Otherwise, you invest the money into somewhere else like real estate, rental properties, because at that point, if you're buying rental properties at cash, you don't give a crap about where the market's going. You're just buying them at cash, pay your taxes, and rent the sucker out and make a steady income flow from it. Now, another reason why I think Bank of America is going to be a sleeper is that I don't think, because they keep announcing they do not want to get into crypto, they do not want to get into the crypto space, I think people are just ignoring it, saying, well, it's just a traditional bank making traditional money. However, I think they are going, if my bet is right, I wouldn't be surprised if Bank of America starts buying up these crypto exchanges, just one by one, just knocking them out. They have a lot of money under investment, I think well into the couple $1 trillion of under management. They are definitely going to start buying up these crypto exchanges if the regulation doesn't come down and say, hey, it's all going to get centralized under one roof. If it stays the way it is, Bank of America will pull a JP Morgan and buy all those suckers up, making it into one. I think there's a lot of people waiting and seeing that all retail investors are sleeping on. I think you should. I don't think you should sleep on this one. I really think you should take heed of it and buy it. It's definitely going to be a good long-term hold. I mean, who knows? My target's $75, but if they start buying up exchanges you may see this target over $100. So, that's a 2x. And for me, I'm not trying to get like 100x, 10x here. I'm trying to just double the money I'm putting in. And once I double, I invest down and put the money in the sidelines on cash. Not stablecoin, cash. Because I don't know where that cash is going to go, whether it's going to go into real estate, whether it's going to go into investing in another business, or even putting it back in the stock market or the crypto market. But with that said, you guys stay safe out there. This is a quick, simple video. I'm up. I think I was only up like 10% last month on my portfolio. Yeah, less than like 9% on my portfolio. I do think this is a good buy, good addition to your portfolio, successful business, going to get you that steady income on your dividend yield. I have a couple others I want to talk about, but right now this is something you should add in and just passively add in. There's no need to go like 100 shares deep. If all you can afford is 2 shares a month, then 2 shares it is. Just stay steady with it. And as always, respect the process, respect the research that you're doing, and respect the markets. As long as you do that, you won't be hurt too bad when things go down, but you'll make a lot of money when things go up. With all that said, like and subscribe. It really helps me out and really get this message out to more people. Thank you guys, and share if you can. I will be back at it tomorrow with another video. Cheers.